Hello and welcome back to a weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. This past week, we saw the market up 1.94%, which brings us year to date up 2.27%, a reversal from what we saw in the previous week, and really led a steady rise throughout the week, mostly because of our three main topics, which is Biden's inauguration and the seamless transition, as well as the executive orders that he signed into law, and some really positive economic indicators that came in at the end of the week. So, Rich, do you want to speak about the inauguration and why that was so important for the market?
Absolutely. It was so important for the market because things went smoothly. It was only a few weeks ago that we had experienced the rioting and the breaching of the Capitol, which was making our institutions look as if we wouldn't have a smooth transition. Remember, during the transition and the inauguration, I should say, Washington was an armed camp just in case. The fact that nothing out of the ordinary occurred was a very big positive for the market. Now, the market really didn't care much and hasn't really reacted to Trump's behavior and whether he agreed with what happened with the election or not, because that really doesn't affect anything. It really is, do we have a new president? Did he come in? What will be his executive orders? What will be the laws that will pass? How will he help the economy grow? How will he deal with the coronavirus? That's what the market's interested in.
Yeah, thank you, Rich. And speaking of the executive orders, now Biden signed a lot of executive orders his first day, and we had the pipeline. We also had the children on the border, but really the executive orders that we cared most about was the eviction moratorium and the student loan moratorium. Obviously, that has an impact on the market, but really what we cared about more was actually the timing that he did. So he extended the eviction moratorium to the end of March. Now, what does that mean for us? That means that it's basically a massive indicator that he believes Congress is supposed to or will be able to get a deal or the next stimulus done by the end of March. And what does that mean? That's pretty huge for the market. It gives an update as to where we think the president will be, and that we'll be getting more stimulus. So that's a big reason for why we saw the market go a little bit higher this week.
Absolutely.
Now, the last thing that we also did see, we've been seeing a reversal in the economic indicators these past few weeks with jobless claims coming in worse than expected. But this week, we actually saw jobless claims come in better than expected. So these are the initial ones that come out every week. We were expecting new initial jobless claims of 925,000, and it came in at 900,000. So 25,000 jobs better than what was expected. And so, again, it didn't have a massive impact on the market, but it continued the upward momentum. Another thing that might be worth noting is in December, we had housing starts, which is a economic indicator because how well the housing market is doing is usually a really good indicator of how the overall economy is doing. We were expecting 1.5 million housing starts in December, and we got 1.6 million housing starts. So again, just some good economic data, nothing massive that moved the market drastically, but definitely didn't hurt it.
Absolutely. One of the items that we are looking at is, and it's related to economic indicators, is what's happening on the coronavirus front and the mutation front. One of the things that we're watching very carefully is that there's news, and that was reported earlier today out of Great Britain, that the new variant, the UK variant, I'll say, may be more deadly as well as more infectious. That will have a large effect on the globe if that's true. So we are keeping that information and we are watching that very carefully.
Yeah, thank you. And one other thing that we're watching very carefully and probably we'll be speaking about next week, so sneak peek into what we might talk about, inflation and inflation expectations. That's been heavily circulating through the market and what we're expecting. So we're going to take a week, give our thoughts on it likely next week. But so far, how is that impacting the market and specifically the fixed income portion of the market? Well, either way, we appreciate you guys so much for tuning in. As we always say, we're here to support you. Your money's here to support you. And we'll see you again next week. So thank you.